So Elon Musk just sold another 22 million shares of Tesla stock this Wednesday. And you might have heard some rumors online that Elon Musk will get margin call somewhere between $100 to $120 for his Tesla stock. So is that true? Can we look into it? That's what this video is about. If you go back in time and kind of retrace the steps, when Elon was buying Twitter, it was 44 billion, and there's 13 billion of loans backed by his own Tesla shares, which is around 20-25% of Tesla. The banks have been unable to find buyers for Twitter debt and are facing the prospects of realizing steep losses. So what this does is Elon wanted to get a loan from the bank, and the bank wants to resell that loan, pass on the risk to someone else, and no one in the market wants to take on that risk at the moment. Musk, meanwhile, is under increasing pressure to turn around the finances of the company that was already struggling when he and his partners bought it. Musk put up billions of his own dollars selling Tesla shares to make the purchase, pledging more stock to help prop up Twitter now would be risky. Some on Reddit, so this is not the article anymore, speculates that the Tesla margin call level is around 100 to 120, which the current stock price is 160. So let me just double check to make sure that is the case. So right now is 150. So I was actually doing the analysis last night. So it dropped. If Tesla stock gets liquidated, then 20% of the Tesla stock will get dumped onto the market, assuming the bank wants to convert this into cash, which they probably would. For reference, Elon announced the acquisition of Twitter in April 2022. So this is important because when you look at the price for Tesla, April 22 is just around the highest high, which is 340, okay? The financing discussion have so far focused on how to replace the $3 billion of unsecured debts of which Twitter pays an interest rate of 11.75%. The maximum banks agreed to guarantee Musk when they agreed to finance the acquisition in April, the people said. The company is estimated to face an annual interest cost of about $1.2 billion based on the current debt structure, which is more than the measure of Twitter's earnings for the whole 2021. So basically, the interest cost is way too high given that Twitter is not profitable. It's unclear what rate would be on the margin loan. So they're trying to replace the debt by changing the structure, but basically no one is taking on the debt. So let's talk about the margin requirement. So from my research, investor place is 25% for Elon Musk. So previously, Elon Musk has 450 million shares at 160, which is 72 billion worth. Right now it's 150, so it's actually gone down, but I didn't update the numbers. So 72 billion times 25% the margin requirement, which means Elon can borrow up to 18 billion margin financing available. So if he has a loan of 13 billion divided by 0.25, which is a 25% margin loan, then the Tesla shares must be worth 52 billion or more, or else he's going to get a margin call. So in this case, he has 450 million shares, so $115 is the margin call level. So that's how I calculated the margin call level to be 115. So that means if Tesla stock drops to 115, he's going to get a margin call and all of his shares are gone, basically. Now, over this week, Wednesday, Elon actually sold another 3.6 billion of shares, 22 million. So we can round this up to 25 million. Assuming this is used to repay the loan, so the remaining is 900 million. Now we don't know if he's going to use this 3.6 billion to repay the loan, but I think that's probably what he's going to do. So that means Elon has 425 million shares, and right now is 150 bucks. So let me just redo the calculation again. So that is $63 billion. Okay, so 63 billion divided by times 0.25, meaning that he can borrow up to 15.7 billion. So let's round it up to 16. And then right now, assuming he used it to pay back the loan, so he has 9 billion remaining for Twitter debt divided by 0.25. So that is 36 billion, that's correct, divided by 425, which is $84, is the new margin level. So this is actually much harder to get to. So in order for Elon to get a margin call, it's $84. So if a couple of rich people get together and try to short Tesla, which we know Bill Gates is already shorting Tesla, back to this 87 level, then Elon has to sell even more shares or he's going to get a margin call, which means he loses the remaining 425 million shares. So obviously he's not going to let that happen. So he's going to keep selling shares in order to repay the loan as it is dropping. So that is really the big problem here for Elon Musk. And if you follow what he's doing on Twitter and the things he's saying, it's obviously not so popular with the general public, and banning journalists is not a good thing. So that continues to put pressure on the Tesla stock price. So if you're wondering why it is collapsing like that, is because of Elon Musk and the Twitter deal. So the question is, will anyone come in, push the Tesla stock price down enough, which is basically by another almost 50% drop, to margin call Elon Musk and take all of his Tesla shares? So here is the Bloomberg article that talks about the banks are unable to sell the Twitter debt to someone else. And for the margin call, here is the data, is 25% of the market value as loan. So that is really the amount of money he can borrow using Tesla shares. So yeah, investor place, that is the article from NASDAQ. Thank you for watching this video, and I really appreciate you taking the time to go through my analysis. And this is actually one of the analysis I've done in Investing Accelerator this week for the weekly group coaching call. If you're wondering what Investing Accelerator is, then you can go to the first link in the description below, and it will tell you about Investing Accelerator, how I invest in the markets long term, and also how to generate monthly passive income from the market, which is my retirement strategy. I'll see you in the next video. Have a great day.